and welcome to today's quick pre-market video, which is going to be as well rounded as it was yesterday, meaning I will be covering equity indices, gold, silver and oil, and as well cryptos for you today. You know pretty well what I do on my site and everything that concerns premium care for clients, including one-on-one. Thank you for liking this video and subscribing to the channel, because these fresh contributions come up at various times during the days and they are connected. So please start by reviewing as well yesterday's video and the extensive weekend one, to which I will be linking throughout this one. Let's start, as almost always, with yields. You remember that I was doubting the retreat continuation, which was so indicative on the penultimate candle that we are seeing with a sizable lower knot, and indeed yields had started moving up somewhat, and that of course is exerting pressure on equities through the equity risk premium, which is a concept I've been covering for months. So we are seeing the call for treasury sellers to return being confirmed in market action, not just yesterday but today pre-market as well, and of course clients were ready with all the details. For now, one cautionary data point is overnight during the Asian hours. Bank of Japan, will it surprise the markets with excessive hawkishness, because the 10-year yield is so well over their 1%, 120 already, roughly speaking, where they had been intending to intervene, and they know something needs to be done, and let's see to what extent they surprise the markets and how well it will be digested, because yen carry trade as the dirty engine of equity and risk taking has been very well covered in my prior articles, and its effect for so many years, decades. A brief look at crypto. Bitcoin going again for retest of 100,000 level, and all the interim progress we had seen in select miners and other crypto plays within equity space will be getting undone today. So this is just an illustration of the risk off, and let's wait and see and let Bank of Japan play out what it's going to be bringing us today. And of course this is reflected in equities as well. Clients know that I had been calling for distinctly decreased pace of appreciation in S&P 500 yesterday. It's already well above the pre-FOMC level, unlike Nasdaq and unlike Russell 2000. Market breadth had deteriorated, and I'm presenting to clients the perspectives that are apparent whenever you look at various settings of percentages of stocks trading above their 20, 50, 100, whatever, even shorter single-digit periods, moving averages. And this is bringing distinct lessons. The right questions to ask are equities overbought on a short-term or medium-term basis? The answer is clearly that they are not yet totally overbought on the long-term basis or medium-term basis, meaning this upswing will continue, but the soft patch hitting during yesterday's session, that call materialized as well. And the same goes for gold, silver and oil. A brief verbal update as regards all of these. Gold is going to be remaining the relatively most resilient of the three assets named. However, it's not immune to the renewed push in yields higher. Silver will be taking it distinctly on the chin, while oil has not given up fight for $76 support and is still within $0.50, which is for oil kind of a spitting distance. But the buyers there have quite an uphill battle, because I have been saying yesterday, and that's a reiteration of late autumn calls, oil is going to be under pressure long term during the new admin broad drilling friendly policies. So be aware and do not bet for consistently long term basis on oil price upswing. What we are seeing now is a double whammy of Russia sanctions and as well of cold spell in the northeast, hiking up demand. Coming back to S&P 500, of course, the first two market breadth indicators would not be in the end as bad looking as they are now. They would be recalculated by stock charts, I expect. However, the deterioration is there, and today the burden of proof is on the buyers to show, and I've been giving to Trading Signals and Stock Signals clients 6,100 as the support level. Today I'm mentioning another one and two distinct scenarios of where I expect fresh buyers to materialize for S&P 500. So stay tuned. Thank you for liking this video. Brief look at the chart. We see that technology is sticking out like a sore thumb. It has been the driver of yesterday's upswing. Financials kind of treading water on a daily basis. Energy understandably down, and the case of utilities will get relatively fast reversed to the upside, but it's still sectoral as well, a risk of perspective. My join page to help you select what's right for you, and the daily publications coupled with intraday coverage on the premium Telegram channels. My professional journey, which you know very well about, obligatory disclaimer, and let's talk again soon.